We had two central banks meet, the ECB, the Bank of England's Monetary Policy Committee. Any observations?
No, I think this kind of went along schedule. The Bank of England didn't do anything. The ECB didn't obviously change rates, but they are announcing that they're reducing asset purchases, which was widely expected as they move into, probably trying to move more into a normalization phase.
I got you. And of course, Mr. Carney has to deal with Brexit issues as we move into 2019. My big question is, I think divergence is a real issue for the rest of 2018, and it has been thus far. Do you think the fact that those two central banks and the Bank of Japan are so far behind on normalization compared to the U.S. that it's going to underscore more divergence of our economies?
I think it will, and I do think that the Fed is starting to get near a tipping point here. So at this point, the Fed has been removing excess accommodation, not tightening, as I like to say. But as we go into 2019, by mid-2019, there'll be a 2.5%, I would expect. And that would be a pretty significant divergence between where the ECB is, where the Bank of England is, the Bank of Japan. And this starts to create problems amongst asset classes, relative asset classes, particularly when you look at the FX and the FX hedging. So it does make it challenging for non-dollar investors to then start to invest in the U.S. because the FX hedging costs could be as much as taking away 3% from your potential returns. That's pretty significant. So I think the Fed needs to be a little bit careful here, probably start to think more about using the balance sheet to remove accommodation as opposed to just continuing on the course with hiking rates forever.
You know, Jim, and I'm in complete agreement with you. And some of the older Fed people that I talk to, whether it's Mr. Olson, Mark Olson, or Bob Heller, they believe the same thing. They believe that the balance sheet needs to be tinkered with a little bit when we reach a certain level in rates. But it certainly seems as though there's no indication that the Fed wants to challenge its moderate runoff long-term strategy. Your final thoughts?
Well, the tipping point for them might be when the yield curve inverts. If they continue on this path, the yield curve will invert. I do think that sends a signal to the market. It might be a weaker signal than in the past. But at that point, I think they need to restore term premia by tinkering with the balance sheet, as you say.